Signing your meeting up for the. Okay. So a very good afternoon. I'm talking here with Chris Skinner, and Chris is very active as a speaker. I always see him there. He's also amazingly active as a blogger of the financial industry. And he now wrote a book, Doing Digital. And well, we know that Chris is always writing a lot of books. So let's see what this new book has a focus of and what his new messages are. So let's talk about that, Chris. Hi, Chris. Where are you at the moment?
I'm just outside Warsaw in Poland, and a very happy birthday, Mr. Everts. It's very nice to see you.
Thank you very much. I couldn't imagine anything better than talking to you about your new book on my birthday. So that's really nice. So we're going to talk about your new book, Doing Digital, and that's basically how the big banks are really doing digital. So, but let's first go back into your background a little bit, and then we go a little bit about the whole books you've written, because you've written 15 books, but let's see, and then we're going to focus on what the lessons is of this one. So, Chris, when we talk about all your books you've written, and the first one, which I thought was really interesting, was Banking in a Globalized World, 2006 or something like that. What was that all about?
Well, at the time, I was freelance consulting and researching and writing for various companies, and I produced a series of white papers once a month that were being used in public domain. And so I brought that together into this book, 2006-07, that really focused upon the rise of Chinese banks and Chinese banking, and also Indian outsourcing and offshore services, alongside the predictive view around what would happen with technology and banking, and in particularly things like using video rather than physical branch-based services, using remote video services, which is still to come.
No, this is really a very good book to read now, because this is happening now. I mean, we're now doing this this digital interaction, and I don't know how many Zooms meetings you're in every day, but really talking about video conferencing, that's really now organizing the world. So this book from 2006 is really very actual. So isn't it funny that all the ideas and the concepts which you've been talking about over the years, everybody says technology is going so fast. Do you really feel the same?
Well, I mean, it's the old thing around, we always overestimate the speed of change and underestimate the impact. And, by way of example, back in 2008, I was presenting and writing about banking as a service using cloud computing and APIs to link an ecosystem of financial providers. And now that's in vogue, but that's 12 years after I started talking about it. And it's just really that it takes a long, long time to get this to be mainstream. When it becomes mainstream, everyone says, wow, where did that come from? It's a little bit like when you see these what used to be the old stars on stage, and they'd say an overnight sensations, and they'd say, yeah, I've just been doing this for 20 years to get here.
Okay, so the first lesson, ladies and gentlemen, technology moves slowly. Before the concept is one thing. I mean, everybody can dream of concepts. Then the technology needs at least 5 to 10 years to really become useful. And then then all the institutions and people and consumers need also another 10 years to get used to it. And maybe that shrinks to 7 years or 6 years, but I mean, it's not going very fast. Okay, that's a great start about that book. And I would love to talk about China and what's really happening in there and how they're doing a digital currency. Then the next book which you wrote was Digital Bank, I think.
Yeah, that was the next key book in the things I've been producing, and that did really well. As you can see, got a lot of reviews, and it kind of broke out my name as someone that was a go-to guy on digital and financial services. And one of the key things I'm saying in Digital Bank is that bank's business model is based around physical distribution of paper, checks, letters of credit, bills of lading, invoices, receivables, payables, you name it. And that has to be completely digitalized. And to do that, it's a different business model. It's based around the digital distribution of data, nothing to do with physical distribution of paper. And that then questions the whole way in which you build a bank and suggests you have to rebuild the bank.
Yeah, and that is still going on. That is really, we're in the middle of that transformation. Then I think digital human came, or was it the value web?
Value web.
Okay.
That's 2016 when everybody was talking about blockchain, and you and I were talking about blockchain on your blockchain conferences in Amsterdam.
Yes.
And we still talk about cryptocurrencies and how blockchain might impact financial services, but it's just, and this came after the book came out as a reflection of my own, which is the use cases in blockchain, which I identify in the book, like digital identity and clearing and settlement, are nothing to do with technology. It's to do with agreements on standards between governments, financial institutions, businesses, and consumers. And that's taking a lot longer to get those agreements and standards in place, which is why
Nothing else is new. Nothing else is new. But I mean, at the moment, one of the most interesting thing in China is that the China central bank is starting their own RMB digital currency. And I mean, everybody is thinking about it. It takes 5 years, but we've been talking about this, and we slowly see these projects coming. This will be a very useful book for a very long time. And then we had digital human. I mean, everybody at a certain point started to talk about humans again, not about technology, but you also have this beautiful thing. What was this about?
It's a combination of two factors, really. One is, as you can see, the subtitle is Fourth Revolution of Humanity. And in my travels, at that time, I've been traveling worldwide nonstop for a long time. I ended up in museums a lot, and I realized that we're going through a massive revolution of humanity, because for the first time in history, every human on Earth can connect with every other human on Earth in real time if they want, through a mobile telephone. And because everybody on Earth can be included in the mobile network, it means that this revolution includes everyone. And a third of the book is dedicated to Ant Financial and Alipay, part of the Alibaba group, or now a brother of the Alibaba group, so they had to separate Ant Financial, and what they were doing with financial inclusion in particular. And when you look at what Alipay has achieved over the last 5 years,
Amazing.
within China, but worldwide, it's absolutely phenomenal. And it's all about financial inclusion.
Yeah. It's all about financial inclusion. You have hundreds and hundreds of millions of people are be able to do it. It's really funny. If you go to China, it's a hell of a job. It's a hell of a job to get a bank account. It's really, they make it as painful as possible with paper and trouble and days. But then afterwards, you are in paradise. It's so easy to basically pay for everything, and to also to have a cash register, or to everything is easy the moment you are in their their platforms.
But there's
So
two
this is
interesting things there, Vince, and that one, well, in fact, there's several interesting things. One is that when I went to study Ant Financial in Hangzhou, they wouldn't take any of my payment methods because I only had cards with me. I didn't have any cash. That meant I starved for 24 hours until I found an international bank like HSBC to get some cash from. The second thing is that you find that nearly everywhere in China is now cashless. You don't even need a bank. And there was a headline in the Financial Times the other day saying that when the coronavirus hit Wuhan and the banks closed for 3 months, no one cared.
Nobody cared. Yeah.
No one cared. But the third thing, and this is the most ridiculous thing, is I've just been doing a study of what the impact of the pandemic will have on the way we pay in Europe. And I interviewed one guy who's actually based in Shanghai, and he said it shows how ridiculous it is that to get cash in China or move money internationally in China, he has to go to the international branch of his European bank, withdraw the cash, and then deposit it in his Chinese bank, because they don't do SWIFT transfers to China.
Yeah. And then also, but if you do not have access to payment, it's impossible to get a taxi. It's impossible to get a hotel. Everything is impossible. You cannot do anything with digital, with normal cash anymore. And it's wonderful how efficient it is, not only to pay, but also to be paid. I mean, if you are an entrepreneur and you want to get paid within 1 day, you basically sign up with WeChat or with Alipay, and you can get money in a very, very easy way. And transaction costs are it's immediately, and the transaction costs are zero or absolutely minimum. So this is a fantastic, interesting book. So you've written that. What can come after that? After writing a book like that, what can come after that? And then we have doing digital, right? I mean, so. What can you talk about? What is digital? What is doing digital all about?
Well, I got a reputation of being someone who was criticizing banks all the time.
Yes, you always cry. You always complain that this doesn't work and that doesn't work, and here it's ridiculous and blah. Yeah.
Yeah, and I felt that I was being labelled as a bank basher when actually I'm actually a very strong bank supporter, but I just don't like the way that banks don't get technology and don't do technology well. And so after Digital Human came out, I was sitting and thinking, you know what, I want to shine the light the other way and paint some banks in a positive light by finding out exactly what they're doing about digital and transformation and technology and the new internet structures that we're dealing with and all the fintech startups that we have to embrace. I wrote down a list of the banks I felt were doing digital well. And of the big banks, the top 50, there were only 5 that I identified that I really wanted to talk to: JPMorgan Chase, BBVA, ING, DBS in Singapore, and China Merchants Bank. And I reached out to the 5 banks and said, can I come and meet with your digital leaders and find out what you're learning about doing digital implementation and transformation? And luckily for me, they all said yes. And I spent days flying around, meeting with their C-suite, interviewing them in depth, transcribing those interviews, analyzing what they said. And out of it came over 30 lessons that are my experiences and observations, interpreting from what they were saying into things we can learn as lessons from leaders doing digital transformation as big banks. And the lessons fall into 4 major buckets, which is the hardest part is working out what to do and how to do it, which is 2 phases. What to do is finding out what you can learn from other digital leaders. So they all went and visited people like Amazon and Alibaba and Netflix and Spotify and talked to them to find out how they organize. Then how to do that internally themselves, the planning of implementation of transformation and change. Doing it, which takes quite a long time and has lots and lots of challenges. And then the final phase is doing it better forever, which is you keep doing it. You don't stop. But working out what to do and how to do it was typically taking these banks 2, 3, or 5 years. The implementation, 2, 3, 5 years, and then doing it better forever. And it's really interesting. There's so many things that came out of that for me, which are human learnings, because a lot of digital transformation has nothing to do with technology. It's to do with changing the mindset and the culture and the people.
Yeah, well, the culture of the people themselves, and technology is difficult, people are difficult, people working together, and then a culture inside an organization and rewards and being punished and taking risks. And also a lot of times it's really, they have a pretty good business going, and money keeps flowing on one side, and you have to really work hard on all that new stuff. It's all very complicated and a pain in the butt. So they also, it's really difficult for them to pay attention to these new things.
Well, there's one key lesson there, which is to do digital transformation, you can't do business as usual. So you have to do business as unusual. And the only way you can get to do business as unusual is to stop focusing on quarterly profit and shareholder return and focus on longer term cultural and organizational business model change. And one of the banks said to me, that if the board hadn't said to the chair and the chief executive, we're giving you the mandate to focus on transformation and change and not on the usual, that they enabled those people to make that change. If they hadn't had that mandate from the board who said, we'll protect you from the investors, don't worry about the shareholders, we're giving you this mandate to make the change happen. If they hadn't had that, I don't think they would have achieved it.
And which bank was that they got that?
Yeah. I mean, DBS had tried to acquire an Indonesian bank and had $300 million US dollars for the acquisition, which failed. And as a result of the failed acquisition, they said to the chief executive, here's $300 million, focus on digital transformation change, make us a leading digital bank, and don't worry about the shareholders or the investors.
Okay. And that is a bank from Singapore, or where's it from?
And it's a bank in Singapore that's now getting loads of awards for being the best digital bank in the world. And some will claim that they're not. The nickname they had 10 years ago in Singapore was Dead Bloody Slow. These days, it's the Digital Bank of Singapore. But they've really gone through 2 iterations. The first iteration was getting their house in order. So from 2009 to 2014, they rationalized their technology stack into one common technology infrastructure across all the regions that they operate in. And then the second wave has been to move all of that into the cloud. So now over 80% of the bank's infrastructure is cloud-based, which is far ahead of any other bank that I've talked to. I mean, most banks, you'd be amazed if they got more than 20% of their operations in the cloud. DBS is 80%.
80%. Okay, so they they also had somebody who had dared to do something about this, because you have to basically get rid of that old stuff and put in new stuff. Did the chief technology officer, is he fearless, or did he have also a lot of knowledge about technology? What kind of culture was there?
Well, kind of there's a common theme to all 5 banks I spoke to, and it's that their leadership, and in particular their chief executive and or chairman or both, had experience in telecommunications and technology in their career as a professional part of their career. So, for example, DBS is run by Piyush Gupta, who joined the bank in 2009 to change the bank. And before that, he'd been running all of Citigroup's operations in India as head of staff, which included all their operations and technology. If you look at ING, ING Direct has been an amazing learning vehicle for how to do banking with a pure digital play rather than a physical play. And Ralph Hammers and the team have really got that in their blood. It's in their DNA. When you look at BBVA, they had a money laundering scandal back in 1999, and the new chief executive was Francisco Gonzalez, who started his life as a programmer. He understood technology, and on day one, and the speech is in the book, 1999, he addressed the board and the shareholders and said, "We want to be the bank that customers can access anytime, anywhere, all the time. Everywhere banking." It was a vision around the internet-based banking of today. So he was very visionary in that approach.
And what year was that he made that presentation?
1999.
Ah, okay. Yeah. So it was really, I mean, you say about ING and about this, that was about the same. That was about the same thing. They had that was a long time ago that they had that experience, right? You say they got a crisis. ING got an opportunity, and the most thing because the ING Direct was started by Hans Verkoren, and who was a director of the Postgiro, but he basically totally insulated himself from ING. He only used a license. He did everything from scratch, everything new, and they left him alone. And that basically became the basis of ING as a digital bank. And so they used a good crisis. This BBVA did you say they had a big crisis because of money laundering? Was that this bank?
Yeah, and they completely swept out the executive team and brought in a new team, which was led by a technology guy.
Yeah,
as it happens. And the same is true in China Merchants Bank. It was born on the internet. The bank started in 1987. And it's part of the amazing growth we've seen in Shenzhen, which is where they're based, at Shanghai. That part of China is a real transformational part of China that's only 30 years old, just over. So,
it's amazing. From 30,000 people to 30 million. Yeah.
And JPMorgan, people might say, well, why do you pick them? But
no, but I mean, let's talk a little bit about that Chinese bank. What they came from an area which was nothing, 30,000 people, village, and then now they're 25 million, and all the big and Apple, everybody makes their products there. So that is they came up with a nice new area, and there was no old good working paper system. They had to build a bank from scratch because there was nothing else.
I'd say what I loved about China Merchants Bank is that I did the interviews, and the insights that they gave me were incredible. I mean, the head of strategy said to me, "We know that if we don't transform to be digital, we'll die." They kind of make it really stark. It's transform or die. But in the bank itself, in the head office, it's about the 28th floor or something, they have a digital history of the bank. And it starts in the early 1900s when, as you say, it was just a fishing village. But it goes through, in particular, the launch of the bank in 1987 as a technology-led bank, becoming an internet-led bank, becoming a mobile-led bank, becoming a fintech bank. And that's what they describe themselves as now, that they're a fintech bank.
Can I ask you the culture inside this organization? I mean, do you see that they're quite independent? They don't have to listen to the communist government so much. They have enough freedom to basically make those moves. How does that work?
I don't think any business in China can work without being partners with the government in some way.
Of course.
But with this particular bank, and I think unusually across Asia, actually, they stand out because of their focus on technology. I mean, they weren't on my original list for the book. And then I have friends who published The Asian Banker. which is a magazine that gives awards every year for the best banks in China
Hmm.
and Asia. And they said to me, if you don't include China Merchants Bank, you're missing a trick, because it consistently wins their award as the best technology digital bank in Asia. And that's why they ended up in the book, to be honest, because of the strong endorsement recommendation from my friends in Asia. And I'm glad I included them, because it really gives an insight. And it
Yeah.
also shows, with the lessons that I was learning from the 5 banks, that whether you're in America, Europe, or Asia, they're all facing the same issues, which is a business model that wasn't born on the internet. How do you convert a business that wasn't born on the internet into one that can be agile and adapt to look like it was born on the internet, like an Amazon or a Alibaba?
Okay. And then the last thing, you had JP Morgan on your, you basically investigated JP Morgan. And I mean, just like the powerhouse of everything, just like anybody who's been the president there is in the government, or the government comes back. This is really, one center of Americans' life. What was, how did they have attention? Because all the money, they're having so much money, and they have so much, they have their fingers in everything. How did they have enough time to put their mind into digital?
Well, I mean, Jamie Dimon, the head of the bank, actually, when the bank was formed through the merger with Bank One in the early 2000s, his first decision was to insource all of their technology. They had just struck, before the bank merger occurred, one of the biggest deals ever with IBM to outsource all of their infrastructure. And Jamie Dimon's first decision was to reverse that decision of the biggest outsourcing contract ever. And the reason he did that, and he made it quite clear, is that technology is what will differentiate the bank. We have to have technology in our DNA in the bank. And since then, I've seen them make a lot of investments and decisions around technology. They 1 in 5 of their employees is a technologist, an engineer, a developer, a designer. 50,000 people. That's a lot of people. That's more than all the developers and designers and engineers in Twitter and Facebook combined. To put it in context, they spent $11.4 billion last year on technology. Now, okay, a lot of that is keeping the lights on, but even so, more and more of that is going into innovation. I find it fascinating. One of the big fintech companies, Stripe, is only 10 years old, and yet they say that they are investing 43% of their time as engineers to managing legacy technologies, bad code, old code that no longer works with new code. If that's a 10-year-old company having 43% of their people dedicated to dealing with legacy, imagine how much development time is spent in a bank that's 300 years old on legacy.
Yeah. Yeah. So, but I mean, you have to find, as a chief executive, you have to think it's important. So you have now seen the selections of these of our bank in crisis, they banks which came into an area which was coming up, a powerhouse, ING, which basically had luck with ING Direct, which basically was nothing strategic, but it just blew up in their face and became half of the profitable part of the business. Now, what kind of lessons can normal human beings out of these 6,000 banks in Europe and 20,000 banks which we have out there, which were all focused on everyday life, which have layers and layers of technology from the past, which have been merging, they have layers of technology, they have all kinds of mergers. How can they use these wonderful 5 companies which have been able to get this done out of your book?
Let's say there's over 30 lessons that I itemize specifically at the end of the book, but each chapter talks about one of those lessons in more depth. And a lot of it is about the human aspects of teams and participation and changing the mindset and giving people the opportunity to be re-skilled, moving people who are branch tellers to being social media supports, moving people who are branch managers or credit risk people to get training in how to code in Python. I actually saw that happening.
Really?
And giving people those opportunities to say, we're not just going to get rid of you, we want you to be part of the new company and get re-skilled. And I guess one of the big things to me is the talk about agile versus the reality of doing agile. I hear a lot of people talking agile, but it was summed up pretty well in ING actually, where they said, we used to be 30,000 people working for a bank. Now we're 3,000 teams working in a bank. And the teams are all 10 people typically on average. Yeah. And the teams are no longer separated between technology and business. technology is business. So designers and developers sit in teams with compliance and risk and regulatory people and product managers, and they work together whiteboarding, ideating, and doing things overnight. Things shouldn't take years. You can't work in years anymore. These guys work in days or even hours. And one of the key things is that as a flattened organization of teams, then if a team needs a decision, they can get that decision that day if they need it. They can get to the chief executive that day if they need it. Fast cycle decision making with a streamlined organization. All of them had this as reality. I mean, they're not all, in my view, doing digital brilliantly, perfectly. I don't think anyone's doing digital transformation perfectly. It's too darn difficult. But they're all trying really hard, and that's the key.
Well, the first thing is they have to think it's important. They have to support the organization structure to basically go agile. And then they have a lot of cultural patience to make it work and to show things that it really works. Is this agile thing everywhere? Can you see, is that in JPMorgan and also in Singapore or China or?
No, it was more prevalent in Asia than in Europe and America. But I think one of the big things, and it's another factor that I regularly come back to, is one of the banks talks about the frozen middle being the hardest part of doing the change. And the frozen middle is the middle management who really fear that they're going to lose their job, lose their career. They've spent 10 or 20 or 30 years getting to have a team and a function and a structure that they now own.
Really, is it just being afraid of that, or is it just that they are afraid that things go wrong? I mean, I normally do not meet a lot of people who are so afraid of their own things. They just cannot see how it can be done in a different way. They have to start believing in that. And once they went through that process, they become very enthusiastic. It's not so much about losing their job. But have you seen that? I mean, you never know why people are afraid not to go through with the change.
A lot of it's fear of change, and there's the great book, Who Moved My Cheese, which I regularly use, about the mice that come out and one day there's no cheese there. And so one family of mice go and look for the cheese. The other family of mice say, oh, no cheese today. And they go back in their house expecting it to be there tomorrow, because they're not that sort of thinker of let's go forage, let's go find, let's go and explore. And I think this is one of the big things that comes out, again, out of my experiences and also the book and the interviews. But I got a lesson many years ago that if you want to create change in an organization, you have to create a reason for change that's urgent. There has to be an alarm bell, some burning platform that's critical, that makes everyone wake up and shake up and say, oh, this is important. But you can't just give a rocket up the backside of people and say, you've got to change. You've got to say, and this is where we're going to go to. So you have to give a destination, a journey, a vision of what's next. And then people can either buy into that, or they can say, I don't like it. I'm out of here.
Okay, we now have the best encouragement to change. Okay, we have this teeny little virus, which is getting everybody in 2 months totally on their back and totally changing. What will the influence be on these 20,000 old institutions, which you basically came up with 30 lessons, which these companies have implemented in the last 15 years? But now everything goes much quicker, and we're here basically not in little rooms with people listening. No, we're here with Zoom, which has 300 million people, a month now as a digital platform. What do you think this how this crisis will accelerate the technology change?
Well, I'm hearing in every corner of conversation the same thing, which is things that were being looked at over the last months or years are being decided upon in days and hours. So, for example, Zoom had 10 million people using the service in December 2019, 300 million by the end of April 2019, because we've been forced to. And there's a great cartoon that I've got, which is a meeting in a boardroom saying, well, we think our digital transformation program is important, and we're going to be looking at this over the next 3-year cycle. And outside is a great big wrecking ball called coronavirus about to hit the building.
Yeah.
And that's what's actually happened with this pandemic, that it's making people move to digital transformation far quicker.
Yeah.
Case in point is the number of banks that would not allow staff to work from home for risk security reasons, and particularly because they were nervous about using cloud-based services. Well, they've just made that decision in the last 6 weeks. Cloud is it, work from home.
Yeah. what will happen? If you look 10 years from now, because you also studying always these new concepts coming in, like Stripe, which you basically are in love with, and which you think is really wonderful, and the investors love it very much. In 10 years, of these 20,000 banks which are now running the business, how many of those banks will be new, and how many banks will be will have disappeared or moved in or merged in each other? How will the landscape look in 10 years because of this technology change being accelerated?
Well, I think there's two things happening. One is the technological impact and the wrecking ball of digital transformation. And we will see a lot of banks being consolidated into those that get it. You may even see some of the new banks like an N26 or a Monzo acquiring some old banks. We've already seen that with some of the German banks, for example. Small German banks are being acquired by some of the fintech companies. But long term, it's more likely that some of the biggest banks that are succeeding, like the JPMorgan Chases, will be acquiring the mid-range banks that are failing because they didn't transform and become digital. And they'll acquire them for their customers and their capabilities, but not for their technology or their operations. And one of the big things I'm starting to write about and think about more, and I haven't decided if it is the next book, but it might be, is the other thing coming in separate to technology change is ethical change. And what I mean by that is having a method of presenting financial services and the like that it does good for society and good for the planet. Banks went through a huge issue around what was described as being socially irresponsible 10 years ago. In fact, they were described as being socially useless when the 2008 financial crisis hit. So I think we've reached a point now where banks have to become socially useful and not just talk about it, but actually prove it. We're actually seeing this right now with Barclays Bank's boardroom saying they have to stop, investing so much in fossil fuel destroying companies that are wrecking our planet. We've got to do better for the planet, but it's not just doing better for the planet. It's actually trying to work out how a decade from now we'll actually have a planet, and financial services is at the heart of that. So my theme is actually described as purpose-driven banking, that banks have to have a common purpose for the common good. And if they can't show that and demonstrate that, I don't think they'll survive long term. And I think technology is a core part of doing that because of transparency. But when we talk about blockchain, what better way to show transparency? Because you can actually see, every record in public domain, if you make it public domain, for all players and all constituents to see how it works. My favorite example of a use case of blockchain that's actually working is in China with Alibaba. And if you give money to charities in China through Alipay, you can transparently see that it actually reaches the destination you were trying to give to and doesn't go in the pocket of some mid-range official in the middle.
Yeah. So they also have, that's a really nice example. Another example, they have every invoice, they basically gets a lot of these accounting packages register every invoice on the blockchain, so that you can verify if you got an invoice, if that invoice is for real. You can just verify it, and it's not because there's so much. China is a fantastic country with a lot of corruption, and that's why they're very interested in blockchain to fix that. Okay, so anybody who's part of these 20,000 banks, 30 lessons to be learned from a traditional bank, going into a nice digital developed with a lot of passion and a lot of success. I'm glad that you found 5 banks. I'm glad you found 30 different lessons, Chris, that we can basically pick up the book and read it. Thanks very much, and we'll see how your next book of purpose-based banking, how that will develop, because I think that might be one of the next one. Okay, thank you very much.